Welcome to Event Charts for another SPY Intraday Price Action. As we discussed last week, after SPY printed this morning star pattern, collecting liquidity below 9 EMA, SPY moved all the way up to test this all-time high. Today it opened a gap up, retraced back to test this all-time high, and closed near to the opening price of the day, closing as a doji candle today. We may need a caution here because even though it gapped up, it closed as a doji candle with low volume. RSI is slightly above 70%. So market is currently indecisive, right above the all-time high. Tomorrow's candle closure may give us some direction. A bullish candle closure above this week may take the price to 753.54. In case if you get a bearish candle closing below today's week, may retrace back to test this support level at 742.43 or even this support at 732, the 20 EMA. Moving on to hourly time frame. On the hourly time frame, SPY has been trading on this rising channel since the pullback from the all-time high. And today it saw a rejection from this trend line resistance, which pushed the price down to test this all-time high support, and it took support from that all-time high level, which acted as a resistance before, by printing a bullish engulfing candle, which led to breakout to the smaller time frame symmetric triangle pattern or the ascending triangle pattern that we'll look at it in the 15 minutes time frame. But if you look at these two candles, it looks like a tweezer top at this resistance level. So if price is able to at least close above the 50% of this bearish engulfing candle, that is around 751 level, may help to keep this uptrend intact. A rejection from this level may lead to test the 20 EMA on hourly time frame, filling this gap completely or even testing the support level of 745.5. Moving on to 15 minutes time frame for the intraday price action analysis. So on the 15 minutes time frame, price opened a gap up today, moved all the way to test the upper trend line of this channel, and rejected by printing a bullish engulfing candle. So the price moved down from 751.3 level to 748.5 level, and it consolidated there for a quite some time, taking support from 20 EMA and 15 minutes time frame by printing a bullish engulfing candle here, here, and here at the third time after printing a small bullish engulfing candle after a doji candle. At the second last 15 minutes of the candle, it broke out of this symmetric triangle pattern or the ascending triangle pattern on the 15 minutes time frame. Now we have this fair value gap on the 15 minutes time frame overhead. Price dipped to that and got rejected. And we also have this bullish fair value gap. So if price retraces back to test this ascending triangle pattern breakout, the support level at 749.75 or this fair value gap, it may help to break this bearish fair value gap to keep the uptrend intact. Looking at the support and resistance levels, resistance we have this bearish fair value gap, the 50% of this bearish fair value gap, which aligns to the 50% of the hourly bearish engulfing candle around 751 level, and this all-time high of 752. Support we have this pattern breakout support level of 749.75 and this previous all-time support level at 749.75 level. Breaking below these two support level, we have support at around 747 as well as this inverse fair value gap which formed due to the gap up today, followed by we have this support at 745.5. As we discussed on the beginning of this analysis, since we have this divergence as well as a doji candle right above the all-time high with a low trading volume, a caution is needed at this level as the market closed indecisive today. Thank you so much for watching.